Before we move on to the Bitcoin charts and do a technical analysis at the end of this review, I want to briefly set the context because right now it's important to look at more than just the candlesticks. It's important to understand which phase of the market we are currently in. At the beginning of June, Bitcoin once again approached the $60,000 zone. Moreover, it has already dropped below this mark several times, and at the time of the latest data, the price fell to around $59,000, after which it bounced back above $61,000. And the main question arises, is this already the bottom, or is this just the first serious test of an important level, below which a new phase of decline could begin? Let's take a look at the facts together. First, the scale of the decline is already quite significant. Bitcoin is now trading not just below local highs and near yearly lows, it is more than 50% below its all-time high, which was around 126,000 in the fall of 2025. In other words, to put it simply, the market has already lost about half of its value from its peak valuation. And this is a very important point because a drop of 10 or 15% is just a normal correction. A 30% drop is quite a serious and dangerous cooling off, while a 50% drop is already a full-fledged revaluation of the asset. Second, the first week of June was one of the toughest for the crypto market in recent times. According to various estimates, Bitcoin lost about 15 to 18% over the week. Ethereum fell even more sharply, and many altcoins dropped by 20, 30, and some by more than 35%. So this isn't just about Bitcoin. It's a broad decline across the entire crypto market. And when not just a single asset, but the whole sector is falling, it points not to a local problem, but to a shift in investors' attitude toward risk. Third, a very important detail, the volume of liquidations. In 24 hours, the market saw approximately $1.8 billion in liquidations. More than 100,000 traders were liquidated, and the majority of these liquidations were in long positions. In other words, people were buying the dip, believing in a rebound, and entering with leverage. Once again, the market has shown that it is not obliged to reverse where the majority would really like it to. Moreover, looking at the bigger picture, over the past 2 days, the volume of forcibly closed positions is estimated at around $3 billion. And here you need to be especially careful because heavy liquidations can themselves be a sign of a nearby local or even global bottom, but they do not guarantee a reversal. Sometimes after a liquidation, the market really does bounce back, but other times liquidations are just the first act of a deeper decline. Fourth, we have a very important level, $60,000. This is not just a nice round number, not just some psychological level, although it is that as well. Right now, there are a lot of interests concentrated around 60,000. Some institutional investors, ETF buyers, large holders, and even short-term speculators bought Bitcoin in the range of about $60,000 to $67,000. In other words, the market has now entered the zone of their average entry price. If the price drops below this level, these investors start to see not profits but losses, and then a very unpleasant dynamic begins. Some start selling because they don't want to sit through a drawdown while others hedge their positions. A third group gets liquidated due to margin calls, and a fourth sees the support break and starts opening shorts. As a result, a level that was support yesterday can turn into an accelerator for the decline today. Fifth, there is also tension in the options market. On Deribit, there was significant open interest in put options around the $60,000 strike. We're talking about more than $1 billion in notional volume. What does this mean in simple terms? Many players are protecting themselves against a drop below 60,000, and market makers who are on the other side of these trades at a certain point are forced to hedge. If Bitcoin approaches 60,000, this mechanism may force them to sell additional spot or futures. In other words, the decline can reinforce itself. Sixth, it's very important to compare the current situation with February of 2026. Back then, Bitcoin also dropped sharply. On one of those days, the drop was more than 10%. It was called the sharpest daily drop since the collapse of the FTX exchange in 2022. At that time, the market came exactly to the $60,000 level. There were also mass liquidations then, and many people said, that's it, this is definitely the bottom. But the problem is that after such serious drops, the market rarely becomes healthy right away. Usually there is first a powerful drop. We've seen that, then a rebound, and then a new test, which we are witnessing now. The drop is already significant and the liquidations are serious. The 60,000 level is very important, but that still doesn't mean the market is obliged to turn upward from right here. Seventh, there's another factor that I personally consider extremely important. This is the outflow from Bitcoin ETFs. American spot Bitcoin ETFs have shown a record streak of outflows for 13 consecutive trading days. Since mid-May, More than $4 billion have been withdrawn from them. In other words, this is the very institutional demand that previously supported the market, but now it hasn't just weakened. At some point, it actually started working in the completely opposite direction. And this is a fundamental point, because if the growth in 2025 was largely driven by inflows of institutional money, then the decline in 2026 could be exacerbated precisely by institutional outflows. Eighth, a very symbolic story is the sale of Bitcoin by the company Strategy. And it's not about the size of the sale. By the standards of their overall portfolio, it's a rather small amount. The problem isn't the size, the problem is the symbolism. Because for many years, Strategy and Michael Saylor have been a symbol for the market of the idea. We buy Bitcoin and never sell it. And when even such a player starts to sell, even if it's a very small part of their portfolio, the market perceives this very painfully. And finally, ninth, it's very important to note that Bitcoin is not some abstract entity in a vacuum, and it's falling against the backdrop of tension in the stock market, especially in the technology sector and in stocks related to artificial intelligence. After strong labor market data in the US, the market once again began to price in the risk of higher rates. Yields have gone up, the dollar is strengthening, and risk assets have taken a hit. According to Bloomberg, the European Central Bank will raise interest rates twice in 2026 due to accelerating inflation resulting from the conflict in the Middle East. It is expected to raise the rate by 25 basis points as early as June, with another increase in September. Central banks around the world often act in sync, and what one starts, others tend to support. And higher rates mean expensive loans, increased demand for money, and a slowdown in the economy. In such a situation, Bitcoin once again behaves not as a safe haven asset, but as a risk asset. That is, when investors start removing risk from their portfolios, they sell not only crypto, they sell literally everything that has grown too quickly and is too dependent on cheap money, which will no longer be available when rates go up. That is precisely why we should now look at Bitcoin not separately from the stock market, but together with it. Because if the stock market really starts to turn downward, it will be very difficult for cryptocurrencies to grow against such a trend. So, what do we have before we move on to technical analysis? Bitcoin has already lost about half its value from its all-time high. The market is testing the 60,000 zone for the second time since February. Liquidations in the past 24 hours have exceeded $1.5 billion, and over 2 days, about $3 billion. ETFs have shown a record series of outflows. For the first time in years, Strategy has sold part of its Bitcoin holdings, and the stock market has begun to show signs of cooling after a prolonged rally. And now, having understood this background, we can move on to the charts. Because the main question right now is not whether Bitcoin is already cheap or not yet. The main question is different. Have real signs of a reversal appeared on the chart, or is the market simply taking a pause before the next powerful move downward? Pay attention to the chart. In front of us are Bitcoin's daily candles. Notice that Bitcoin broke through the descending trend line at this point, which was drawn through two highs. And it has tested this line. Here, in this spot, there was a retest, and then it moved upward. After that, stopping at the 200-day moving average, let me temporarily remove the markings. In this area, it went down, breaking through all the moving averages from top to bottom. And now it has reached the lower boundary of the range where it had been trading for many days. And it didn't just reach the lower boundary, because according to the candle's close, it is marked at the level of $62,909. It broke through that level, but now it is testing the next important level of $60,293, which was established back in early 2024. That is, we tested it here, and we tested it here as well. There was a false breakout here, another test and another test. Then we tested it here, here, and then finally moved upward, and from below we also kept hitting it. Accordingly, this is a very important level, after which comes, here it is, marked by the lowest close, yes, then with a retest in this area, still in 2024, that is the $54,000 level. So by all indications, this is our nearest target. What needs to happen for us to start talking again about Bitcoin turning upward? The chances for this, I have to say, are not very high, but the first thing we need to see, at least to start considering it, is a bullish engulfing pattern on the daily candles and preferably a consolidation above at least the nearest moving average. And that is $73,000. The 100-day moving average is shown in red on the chart. So, first of all, we need to see a consolidation or engulfing of Friday's bearish candle. Now let's turn on the magnet tool. Right here. This is $64,000 and above. That is, we need the daily close to be above $64,000 and then a consolidation above the 100-day moving average, meaning above 73,000. Well, that's an approximate value. So far, we haven't seen anything like that. Only red candles and a high probability of the movement continuing toward the 54,000 area. Now we'll remove all the markings and switch to the monthly candles. What do we see on the monthly candles? We see exactly what I warned about. After updating the yearly low of $60,000, Bitcoin is now testing the 50-month moving average. But things aren't all that great here either. Why? First of all, if we close June even at the current levels, we'll see that the 2 months of growth, specifically March and April, are ending with a bearish engulfing pattern, meaning they are completely engulfed. Moreover, we can see that the 50-month moving average was already tested in 2022 and 2023. This means that there is a high probability that if Bitcoin breaks through the 50-month moving average, if that happens, after the bearish engulfing of these two green candles, it will continue to decline toward the 100-month moving average, which is around the $40,000 area. And the RSI indicates that it is moving toward the 30 level. At that point, we will have some oversold conditions and possibly a reversal. For now, there is a high probability that we could see $54,000 or even $40,000. Now let's look at the weekly candles. On the weekly candles, we also see a rather unfavorable picture. First of all, right now, Bitcoin is trading below all the moving averages. When I say all, I mean the basic ones, the 50-week green, the 100-week red, and the 200-week orange moving averages. If this happens, then the next technical target, first of all, is the lowest candle close in September 24th, which is still $54,500, 54,000. Also note that the blue curve is the 300-week moving average, and that is also $54,000. And to be honest, I don't see a single reason why Bitcoin wouldn't go into this area. Here, the second important question arises. Will it be able to hold within this range, or will it break through this level and continue further down? We will continue to monitor the situation as events unfold. For now, I strongly recommend that you refrain from making any purchases until the market gives clear and understandable signals that it has potentially reversed. The first of these signals is a bullish engulfing pattern on the daily candles. Subscribe to the channel and join the Quant Furians team. We did a review on the Quant Fury platform. This is where I trade, this is where I open my positions because I pay absolutely no commissions and I trade not only cryptocurrencies but also stock market shares, indices, commodities, gold, oil, gas, and forex market instruments. Goodbye.